Hey folks, today we want to look at a stock in the transportation space that really appears to be coiling up for potentially another move higher. Before we look at the charts, give you a little bit of a story. This is UPS, ticker symbol UPS. That's of course package delivery. One could make an argument for some sort of seasonal tailwinds here, as everyone of course is receiving packages here over the next few days through Thanksgiving and Black Friday, and then of course the Christmas holiday. So it may be to some extent more of a psychological thing than even a whole lot of fundamentally driven. But I want to show you guys what it looks like on the chart so you can get your head around it as well and see if it fits your risk parameters. Looking at the chart, very simply, you can see the stock basically continues to do what an uptrending stock should do, which is move higher, consolidate. And if we focus on the most recent consolidation phase, which has now basically been going on since May, so that's like most of this year or a good part of this year. You can see we can kind of draw some simple lines here to kind of give us a visual resistance. Let me get rid of a couple things here. And basically what we're doing, or we have been doing for the past few weeks, is essentially consolidate below this previous all-time high is really what it comes down to. And so we could draw some patterns and some lines and call this all sorts of things like bullish flag pennants and whatever. It doesn't even matter. The point is we're consolidating right now. And I would argue that the path of least resistance is probably to the upside. So the stock clearly hasn't broken out yet, but I think any push above, let's say, 216, 217 on a daily closing basis probably could get sort of the animal spirits back into the stock and probably get it somewhere in the, let's call it at least the mid 220s. Doesn't seem like a big move, but if you're the kind of person who likes to use options to kind of define your risk, this is something that could be done here as well, or you just buy the stock, of course. So this is interesting. Now, would give you some perspective here. I want to just quickly go into the market rover, which is the tool that we use to define our trends. And if you look at the market rover, which is really, really important for us to use to kind of give us these ideas, you can see as the stock pulled back, we went into a neutral zone, and we just recently went back into a bullish trend. You can see there in the middle part of October, we got a trading buy signal. So basically the trend is defined by the green background. That's where you have your bigger trends, your bigger profit potentials, where you make potentially hundreds of percents over time in any given name, or at least many dozens of percent. And then you have these trading buy signals along the way. So what we're looking at right now is just in this video is a continuation of this trend that, as according to the aforementioned analysis, would give us more upside. So it's nice to have something that allows you to contextualize whether something is bullish or bearish from a trending perspective, or neutral. As you can see, it was neutral for a while, but then going back into a bullish or ultimately maybe a bearish trend. And then along that, being able to place your trade. So kind of swinging within the trend is what some people refer to, even though, again, I will tell you, you're going to make much more money over time respecting the trend as opposed to clicking around in between too many times. Hope it helps. We'll see you again soon.